The forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Especially as bonds and stocks are becoming more correlated, you need something uncorrelated.
Yes, absolutely. Absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Well, okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric, and it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Cathie Wood's latest prediction has caught everyone's attention. She has a base case of $600,000 for Bitcoin, with a bull case of Bitcoin reaching $1.5 million per coin by 2027. And Cathie's not just talking numbers. Recently, she shared her insights on Bitcoin not merely as a cryptocurrency, but as a game-changing asset class. According to her, Bitcoin isn't just about technology, it's a new way of thinking about money. It's a global, private, digital, rules-based monetary system, revolutionizing the way we perceive and use currency. Delving into the ongoing Bitcoin versus Ethereum debate, Cathie provided her thoughts on the future trajectories of both of these two leading cryptocurrencies. Beyond cryptocurrencies, Cathie ventured into discussions about the future of AI and technology. She explored the synergies between Bitcoin and AI, envisioning a future where these techs converge to shape our world in profound ways. Make sure to stick around to the end of the video where Cathie reveals whether or not she believes we're in a crypto bubble. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's why Cathie Wood predicts Bitcoin's price will skyrocket to 1.5 million by 2027.
This is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. First, let me tell you a little story about Bill. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and, those focused on the Ethereum network. Chris Berniski, you may know him, he was our first crypto analyst and went off to start Placeholder. He decided, you know what, we should have a meetup at our office between the Bitcoin and Ethereum supporters. and we'll provide
religion.
rules of the we'll provide rules of the road. And Bill was the grown-up in the room, set the tone from, the Ethereum side. And we had such a productive talk that I went out and bought Ether right away. We own, I already owned a lot of Bitcoin because it was so convincing that there's a place for both. Yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. And so, yes, we think that decentralized finance, and we do call it now the internet financial system, and taking the middlemen out of everything.
Get the sand out of the gears.
Yeah, when we did our digital wallet work, we were saying, okay, let's try to figure out how many steps it takes for a merchant or for a consumer to pay a merchant. And that was 9 steps, including the 2 of them. And, there are many other middlemen, but these were the most direct steps. And that is a 2 to 4% tax on every purchase in the world if you're using intermediaries, credit cards, and so forth. So just think about that. Cutting, that tax rate dramatically is going to increase access. First of all, if you look at the Wright's Law and apply it to industrial robots, what we see is based on the 50% cost decline for every cumulative doubling in the number of robots out there, we believe that during the next 6 to 7 years, that space is going to grow the fastest, even faster than AI. Now, this is from a market valuation point of view. I'm talking about how it's valued in the marketplace. We think by more than 80% per year at a compound annual rate, whereas we think all of disruptive innovation will be growing 40% from roughly $20 trillion now in the public and private market. And Figure AI, we have taken a position in our venture fund there. So from 20 trillion to 220 trillion by the year 2030. So that's a 40% compound annual rate of growth. But generalizable robotics is going to accelerate the exponential growth rates. So I can tell you why. And I mentioned it briefly, but in the reasons, but in a word, people are scared and they are hugging benchmarks because they don't want to go through another tech and telecom bust. They don't want to go through another financial meltdown. People are talking about another technology hype cycle here. So these are trigger words for them right now. So here's the irony. In the late 90s, I was there. This idea of the internet captured the investor's imagination, and they started valuing companies on number of eyeballs potentially in 10 to 20 years.
I'll never forget when one travel company was worth more than all the airlines put together.
There you go. So too much capital chased too few opportunities too soon, and it ended badly. The technologies weren't ready and they were too expensive. But what people do not understand is the seeds for everything happening now were sown during the 20 years that ended in the tech and telecom bubble. They've been germinating for 25, 30 years. We are ready for prime time. And unlike the late 90s, they're running away. They're running for the hills. What are the hills? They're benchmarks. So here is the question there that we're getting all the time. Is this a bubble? And the way we are answering it is, no, this is not a bubble. There's something profound going on.
Was electricity a bubble?
Exactly. Now, is there too much capital chasing the same thing? That could be. I can tell you, we've had and the headlines, and I'm not saying anything that you don't know, but we have been pulling away from NVIDIA mostly because we see how well understood that story is. And it is. And all praise to Jensen Huang and his incredible team. They have done so much of the heavy lifting, as we've evolved to this level. Now, however, we're the companies in our portfolio that are hugely undervalued and not recognized for where what AI is going to enable are those with deep domain expertise, and especially in one of your favorite areas, Peter, the multi-omics space. So deep domain expertise, AI expertise, take this seriously. This is going to determine winners and losers, good distribution, whether alone or with partners. And then finally, most important, harnessing that proprietary data that a company has that nobody else has. And when we think AI, ARKW is probably the most focused, but AI, as I mentioned before, is going to permeate every sector, every industry, and should impact every company. And so our flagship strategy has the multi-omics in it as well. And we think that there will be some of the most profound applications of AI in the multi-omics space, which is incredibly out of favor. You know, when
it's been a bloodbath.
when the
biotech stocks,
yeah, and when the critics, shall I say, see a sale of NVIDIA and the purchase of Recursion, which, by the way, NVIDIA's venture firm owns and is very picky about what it owns too, especially in the life sciences space, they go crazy. They don't understand. They don't understand that Recursion is, from a drug discovery point of view, getting superior results because of AI and because of NVIDIA. Just to jump back to the last point, because I think something, as we say, new discoveries and just kind of unlocking the code to life, death, and disease. That is what's going on now. This convergence between multi-omic sequencing and artificial intelligence. But one of the more practical things that I think astonish people who are in the research business, shall I say, is that the number, if we're right, the number of trial failures, and 90% plus of trials fade, 95% of trials, they fail. That's going to drop by, we think, 75%. And that's going to be a huge unlock of resources. Very practical, huge unlock of resources.
And what the
think people understand. This brings up the open source versus closed. Just in the spaces with Elon, he was saying, OpenAI, you should call it closed AI, But, we have, and it's in the big ideas, we have a chart in there that shows the rate of performance improvement for closed source models and open source models. Now, if you look at the level, GPT-4 is just out there. It's, way above the rest. But if you look at the slope of the line of performance improvements for open source, it is steeper. That's improving faster. And I'm wondering, I often say with the Bitcoin blockchain, I say, hey, this is a giant neighborhood watch. You've got a lot of people whose livelihood and wealth are concentrated here, and they don't want anything to go wrong. I feel like that should be the case in open source, with open source AI as well. Now, Elon in our spaces said he thought closed would win. And I'm thinking, well, maybe, but could it be that, we've seen Llama 2 and can't wait to see Llama 3 is good enough. And I've talked to many enterprises who say, we just need this to settle down because we have to, quote unquote, hardwire this for compliance and security and all of that.
So there's Cathie Wood with her analysis, painting a clear picture of the future of finance that's both exciting and accessible. As she breaks down the complexities of Bitcoin, she's not just talking about numbers on a screen. She's inviting us to imagine a world where money isn't confined to borders or controlled by institutions. It's a tool for empowerment and innovation. With every word, she's guiding us through a journey of discovery, from the Bitcoin versus Ethereum debate to the potential of AI and technology. As we ponder whether we're in a bubble, Cathie's insights remind us that while caution is important, so is embracing the possibilities of tomorrow. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. Hey, anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.